Good afternoon. Welcome to this video webinar. This is the Do Better webinar hosted by Esade Business School. My name is Jonathan Wareham. I'm a professor in the Department of Innovation, Operations and Data Sciences, and I have the honor of hosting this webinar today. Today we will be talking with Ivan Ostojic, who is the partner and leader of McKinsey's EMEA innovation practice. In addition, his own area of specialization or expertise lies in pharma, medical products, biotech, life sciences, and advanced industries. Joining him will be my colleague, Professor Ivanka Visnjic. She is an associate professor at the same department where I work and a rising star in our institution. So as such, we will allow her to have a conversation with Ivan, and I will be here as a moderator. I will also be watching any questions or feedback you might have for the chat box, and I'll be collecting those and making sure that those are fed to our very distinguished speakers so they can concentrate on the conversation. The issue today, the topic of our talk today is about innovation, and of course, we're living in exciting times. Scholars of innovation, perhaps wrongly, like to romanticize crises, wars, pandemics, whatever, environmental crises, whatever, as sources of innovation. And the logic is very simple, and that is when there's some existential threat, societies in various ways have proven very good at marshaling tremendous resources to solving very well-defined problems. And out of these solutions come new ways of doing things, new processes, new technologies, new products, new paradigms that have many, many other benefits and applications in a variety of different industries. And we're just seeing that, if you look at the Second World War, we're still amazed at the various applications and technologies and how they're being used in medicine and energy and so forth. So what we want to do is now that we are still maybe in Europe have it under control, but there are many regions of the world that are still in the midst of this COVID crisis, have a conversation with Ivan about what is happening out there and what companies are learning from them. What sectors are learning? How are they responding? What will be normal for this sort of post-COVID pandemic? Unfortunately, or maybe it's correct, but we tend to see a lot of the negative things in the media when we look around and see what is happening out there. And I don't mean to discount that, but I would also like to say that there are many industries and companies that are responding in a very exceptional way, in noble ways, in very creative and innovative ways. And what I would like to do is to turn that over to our Ivanka, would you like to take the helm?
Sure, Jonathan, thank you so much for introducing today's topic. So Ivan and I prepared to talk about what really separates winners from losers in the next normal. And by that we mean companies, but also regions. And there are about three things that we will organize our conversations around. One is the difference in the initial conditions. So the positions that the companies founded themselves in regions when the crisis started. And the second one is the differences in the reaction to the crisis, the ability to quickly adapt to the crisis and survive. And then finally, and this is what I believe is the most interesting and most relevant today, we'll talk about the differences in the work that's being done now to prepare for the next normal and to reimagine the society and the industries as we move out of the crisis. So that's roughly what we have prepared today. Even do you want to add anything? What part do you find most interesting?
Well, I think thank you, Ivanka. I think there are two parts, right? I mean, it's really on the company side, it's every Kennedy once said that the Chinese character, and it was probably not accurate linguistically, for the crisis has two kind of symbols. One is for threat and the other is for the opportunity. So I think we've seen from the previous crisis, and we'll talk a little bit about this, some fundamental assumptions of the industry being re-examined coming out of the crisis. So the question is then really which companies will be able to profit. In the past, it were mainly fast attackers or digital attackers funded by a lot of money. I mean, can incumbents learn from previous crises? So that's one. And the other one is actually we are seeing, unfortunately, world shifting into more bipolar world, where actually a lot of what looks like at the forefront as a political conflict actually has deeply rooted into fight for technology platforms. And I think this regional aspect, and I think a lot of people who will be here on webinars come from Europe or Latin America. How can other regions get into that game, especially given fragmentation across multiple small markets and so forth? That'll be interesting, I think, to discuss with you.
Absolutely, absolutely. So there we have it. 3 parts of the conversation: starting positions, adopting during crisis, and then finally shifting to the next normal, both companies and regional perspective as well. So that's about it for the overview, I would say.
Great. Thank you both, Ivan and Ivanka. And so let's start out with some simple questions, and that is, what industries or sectors are best positioned to come out of this in healthier and stronger and more innovative than they went into it? What are the initial endowments or capabilities that some industries have that differentiate them from others? Which sector should we be keeping our eye on for some really interesting developments?
Ivan, do you want to go ahead and?
Yeah, so I think we just recently did we just recently did a big survey on the innovation in the crisis with executives of different sectors, and I think you wouldn't be surprised that on top of these sectors where people see opportunities for growth, one of the biggest actually opportunity in COVID is technology sector. You also saw that the stocks are going up. We recently did actually quite an extensive work on mapping different technologies and how are they evolving, and we can actually see that it looks like we're in interregnum between massive fundamental technologies like AI, that we see that momentum is going a little bit down, but then on top of that, the momentum is going up in the next wave of these technologies, which are more applications like computer vision, generative networks, and so forth. So we are actually not even kind of close to the peak of the technology disruption that is going to happen. So that's one sector, and then you wouldn't be surprised to see there on top healthcare, consumer packaged goods, because their kind of fundamental business model is shifting with consumer preferences. Financial services, a lot of people you read nowadays complaints from professional investors about Robinhood. A lot of people with some money, a lot of free time. That's also changing fundamentally how that industry and assumptions of that industry, retail and communication services. And maybe then back on the tail end, we see industrials, although from McKinsey point of view, we saw a lot of demand on building new businesses in this sector, industrial and basic materials. But if you ask executives, I think what we see on our side on the demand is probably few ambitious executive trying to disrupt the industry, but I think in average we see that they are trailing in terms of enthusiasm to use this crisis as the opportunity to grow.
So I think that's quite right. Definitely a wide variety of exposures in terms of the industry differences and verticals. You have on one side e-commerce and other big tech companies, on the other hand side probably also tourism, events, hospitality that has been completely disrupted. But I think one other thing that is relevant here, even, and I wonder whether you agree, and that is the level of innovativeness, agility, and readiness to react to the crisis that companies had going into this. And I would like to take here an example of a company I know fairly well in terms of innovation, which is Enel. Enel is the Italian utility giant, and they met the crisis with advanced levels of digitalization. At the beginning of 2020, for example, they were in the full cloud mode, and they actually do not expect that coronavirus epidemic will have a major impact on their results, thanks to these efforts to digitalize. And this is just the digitalization, right? On the other side, you have innovation tools like hubs and collaboration with startups, communities, crowdsourcing platforms. So companies that really develop their ecosystems and culture to innovate versus those like JCPenney and other retail chains that are currently struggling and are on the brinks of bankruptcy, really, because what happened with COVID-19 is that it acted as a downward spiral for the challenges that they were already in. I don't know if that kind of initial condition is something that you observe as well.
I know it's a little bit high level. We should do it with examples, but I feel like there are two things that are happening at the moment. So one thing is really just whatever we were doing before the crisis. Let's say, having our sales force to go and see people physically. There are companies who managed to kind of turn on the vehicle and just simply pick what was already existing, like Zoom and other goodies, and implement that at scale. So there is no fundamental change really that they do things much smarter, that they use analytics, but it's just digitizing what they do. Even on that, some companies struggle, some successfully executed this pivot. So that's one area, and I think when we talk about fundamental innovation, that's changing P&L and moving industries. There you actually will see a lot of companies that kind of approached innovation as I would say touristically. They do experiments where they bet on certain things. It's just stochastic process. I mean, first thing that die in this kind of crisis when you have a P&L problem is the innovation. So they have relatively probably bad starting point. The companies that were actually approaching innovation in a more strategic way, integrated in a strategy, having a long-term strategy, even modeling some growth, net new growth, as we like to call it, and then having a clear targets and a budget set. I think we see that they are really strategically now exploring this crisis to even accelerate some of the innovation or try to kind of drive the through leveraging the changes in assumptions in the industry to try to really put all wheels up to drive this, and either through their core business or through business building activity. Some of our clients, interesting that you're mentioning energy sector, they have actually understood that energy will undergo transition, so they have separate units which will drive completely different businesses that operate like BUs, and that actually now in time of crisis it is also thriving as you get easier access to some talent because of more free time or flexibility, or you can get to some assets in an easier or cheaper way. So I think those that were entering crisis as innovation as strategic imperative with the good capabilities, I think they're trying to use this as a top opportunity to innovate. The others are struggling a bit, as I explained.
So I definitely agree. So starting as an innovation strategist versus starting as innovation as a theater is probably a good way to summarize the entry point to it.
Yeah, absolutely. And then having assets and capabilities to deliver against this, right? Because I think I like this kind of analogy. I always say big corporations that have good revenues, they're actually created to control the risks. So you have a quarterly P&L review, and then you can, if something is wrong, you course correct. But for some of these innovation, especially that it's not incremental innovation on your current products, but really fundamentally kind of industry changing, you actually need quite a risk-taking mindset that's more present in the startups. And not everybody has built these kind of two-speed vehicles within their organization to grow the core, but then innovate at speed. And those that built that capability are actually in a good position now.
Cool.
Those are some really interesting insights. I really like that metaphor of the two-speed vehicle because it's useful in thinking because it suggests there is a trade-off in a lot of this, and that is big organizations, particularly the highly capitalized ones that are fixed cost industries and so forth, they need to generate that revenue constantly to amortize the investments and so forth. So when we talk about bringing innovation to the center as a strategic imperative and not just window dressing in theater, as Ivanka mentioned. It's difficult if you have to, maintain a huge, highly capitalized institution that employs hundreds of thousands of people, right? And it's fairly difficult. And so I would, sort of going on to the next theme, one hypothesis that people talk about when we look at, for example, things like the industrial internet and the adoption of technologies in more traditional industries is the hypothesis that tech companies, the Amazons, the Googles, those companies with those cash bases and those endowments, technology endowments, have an easier time horizontally integrating into new industries than the established industrials that have deep knowledge into manufacturing or minerals extraction or process industries, right? And so I would argue, maybe people have different opinions, but I would argue it's a hypothesis, right, that will it be easier for certain companies, perhaps the tech companies, to innovate by moving into different industries, as even mentioned, horizontally and integrating, or is that a fallacy? How do you see that? What makes these companies innovate better during a crisis?
Cool. Ivan, do you want to take that one?
I have to admit, this one actually particularly intrigued me, Jonathan. Also in our work. So recently, I was a co-author of a piece of on kind of innovation in Europe, looking more at the global one. And then I got a lot of comments from people in LinkedIn, and somebody actually made a very interesting comment. That's why I'm telling you a story about how, those tech giants, we see them as a tech giants in principle, but they actually, he said, they're a customer first company. So in that sense, they have kind of obsession with customer centricity, and they're very close. And on the back end, to your point, they have this kind of agile technology platforms and ways of working, so they can actually very rapidly launch their features around the customers that they quote unquote own. So it's a similar model like Amazon, like Apple. You have a device installed base, and then you're starting to launch new services, like Google. While many of the companies that you mentioned in other are actually in a way product first, so they kind of try to perfect the product, and then they somehow try to sell through value chain, and they have actually harder time, to your point, because the distance from them and the customers is much, even if it's a B2B customers, it's like much higher. I mean, I give often example. I've worked recently like consumer chemical companies. I mean, a lot of kind of good stuff, like even the more inventive stuff like cold washing, it's going to be sold by companies like Procter & Gamble, but it's actually produced like specialty chemical companies in backend. But these specialty chemical companies, they have no clue essentially what the customer wants. I mean, they just get the brief from Procter & Gamble with specifications. This is what we need now. Go and reverse engineer and innovate. And I think that model, where you are distant from a customer, to your point, have much more difficulties into pivoting very quickly into other areas. While these tech giants who are very close to customers, I think that's one way. And then the second way is the ones who have some sort of a bravery to do like experiments or have a engine that can scale to re-examine assumptions of the industry. And what I mean by that, for example, before in the past crisis, like 2008, I mean, there was this notion of sharing economy or gig economy. And for example, one company that capitalized was Uber, because then all of a sudden you didn't need to own the assets, you would just create the marketplace and so forth. And the question is, what will be the assumptions that will be shaken this time? There's an example of this kind of real estate company in China that completely changed the way that you look at real estate. They created some 3D experiences and so forth. And actually they had quite a surge in the demand for some of the real estate. So what I want to give the example with this is is it now that more of high touch services will shift online, and who's going to profit from that? I think that's the other area where companies who kind of ride on that wave or hit that wave will be probably successful to scale that across multiple areas where they play. So I think these are the two: one that have proximity on to the customers that can quickly scale almost like microservices in different horizontals, and the other ones is that really hit that wave, which is probably more risky strategy. But I would see that you need to scan what will change in your industry or adjacent, where you have an opportunity.
So what I'd like to add to that is that I think that this really distinction between the product first and customer first is very interesting, and that it differentiates also the speed and the agility by which companies have approached changes in the crisis. But one thing that I thought was really visible so far is also the creation of these frugal innovations and really the adoption of already mature technologies. So really acceleration of the changes in the customer habits, in the level of digitalization, and then also bottom-up innovation initiatives. And there are probably two examples that I have in mind that come actually from Barcelona and Spain, where Esade is based. The one is really the higher ed example, and that there I would take us as a school. I think with a lot of other business schools and higher ed players, we all moved to about I would say 94% online, with more than 4,000 students in the case of Esade. And when you think about these new services that we're creating, these new online business models, they were really basic at first. You could almost call them frugal or even minimal viable services. And they were there just to ensure the continuation of the educational experience for our students. But today, like 3 months later, we are really building these first experiences and evolving towards new educational forms that are potentially breaking the paradigms of the format as well as the content of educational delivery. So I would say, even to your point, that would be sort of trying to go through the experiments from the more basic, adopting mature technologies and then just giving some frugal innovations to survive, all the way to creating new forms. And experimenting towards more radical innovations. And the other thing I think that besides this more of a, I would perhaps call it the service innovation aspect, I think what we have seen a lot is the organizational innovations. And there again, when I take what happened in Barcelona in COVID-19 hit in March, we struggled in Spain immensely with the lack of respirators for hospitalized COVID-19 patients. And unlike China and Italy, we did not have local medical device manufacturers that were capable of supplying the respirators. And what happened there was something truly remarkable. Startups with 3D printing capabilities and fab labs and maker communities started informally joining forces with engineers and designers, doctors, and employees in manufacturing companies to design and 3D print and then produce hundreds and hundreds of these low-cost ventilators. So what they did was really help avert the catastrophe, and this whole process of adaptation was based on this new informal ecosystems that were created on ad hoc basis and delivered these new products and services to fill the need. So I think that's kind of like the if I think about the innovation results, right? What has already seen impact, I would think of these ecosystem innovations that delivered more frugal and service innovations. But the big question is, in my opinion, is what comes next, and where do we invest to create the next normal?
Okay. Okay. Go ahead, Ivan. I apologize.
No. It's apologies. I just think there are a couple of kind of, if you're, I wanted to ask Ivanka's questions, although I don't have a crystal ball, but I think we see already 3 or 4 areas that emerged, and you won't be surprised, due to COVID, and I'll just kind of quickly explain. So one is this kind of almost overnight digitization that happened either in the activities or even like, I mean, telehealth, for example. This is like we were kind of struggling for 10 years to get it at scale, and then some European countries like UK got it like within few days. They were certified set of providers, and all of a sudden, number of patients is using the services. And you now see, for example, announcement in Europe from pharmacy chains that they will start building healthcare ecosystem where they build digital health players into one place, or even kind of healthcare providers. So that's very clear area. I'm not just talking about healthcare, but it's really this digitization wherever it can happen. The other areas, what people learn to do quite effectively now is to make most of the data. So like especially with COVID, where we needed to model and trace the patients and so forth, it's becoming obvious. Although it was for many obvious before, but it's becoming obvious that we need to integrate as much data as we can and try to drive insights, and also even kind of more for commercial purposes and so forth. So that's the second area. And then the third is all the virtual interactions, in a way, which we saw surge in virtual interactions. I mean, not surprising, but actually many of that's there to stay. Kind of like as I mentioned, this Evergrande real estate group in China. I mean, they saw 118% increase in February in the demand for their services, for just kind of because they changed the experience how you view the real estate, and there are many examples like this. I think that's the one. And then I think we saw also the trend. I mean, McKinsey published a lot of reports, MGI, which is our institute, around future of work and automation. And there was another report where people wouldn't believe some of the data. I mean, like kind of how much people desire to have more flexible type of freelance work in a way, in a structured way. I think that flexibilization of work, we saw some examples now during COVID, where people like successfully used platforms to profit from that flexibility of work. That was actually one thing where I think maybe that continues at a bigger pace post-COVID than it was before. And then the fifth one, and then I stopped with listing, is because now supply chains have to be much more resilient than they were before. And the total globalization that happened will need to change a little bit. Some of the companies that can provide services to others to have predictable, flexible supply chains. We saw Blue Yonder, during the crisis. They're one of the world's largest flexible fulfillment providers. They actually were integrating data feeds and providing a lot of supply chain services successfully. I think those are kind of 4 or 5 areas where I see really that the change. These are just axes. Then you need to see specific opportunities for individual companies. But I feel that's where the kind of shift is there to stay in a way.
Interesting.
Okay, excellent. Those are some real provocative insights, and you mentioned 2 things that I think I want to push back a little bit about some of the things you're saying, just to go a little bit deeper. You mentioned digitization of healthcare, data intensive. Be more data intensive in how we organize decision making and processes and the sort of the realization of products, virtual interactions, and all these sort of things. Let me push back a little bit and ask you something here. If artificial intelligence and machine learning have been in the public press now, just at a level that's pretty widespread now, and most people understand it reasonably well, and the whole AI community, machine learning community, is very much an open source type of culture. So all the algorithms and the code are open source. It's available online. And when you talk to consultants who are actually implementing this stuff, they'll all say, or many often you'll hear the same story. They're saying that the problem isn't the technology. The problem isn't training the model. The problem isn't the algorithms, etc. Those work real well. It's everything surrounding that. Right? That is, the data the models are trained on, the processes with which they are used are, they're not doing anything fundamentally new. They're doing, as you said, the same things, just a little bit differently. But realizing any type of business value from artificial intelligence and ML is generally not the problem or the challenge with it is not in the core of the technology or the algorithms. It's in everything around it, in terms of changing paradigms and scaling and these types of issues and implementation. And I'd like you to speak to that particular problem, because when we list off these list of wonder technologies, it's almost a little bit too easy, right? I mean, someone has to implement this stuff and do it, and you as consultants do this, and people struggle with this. It's not an easy thing to do. So as a capability moving forward, what capabilities do we need to do this effectively? And the other question I'd like to ask you is, you mentioned supply chains, and there you get into this, you can't digitize everything in a supply chain. You're still dealing with very old-fashioned physical logistics and the constraints of physics and chemistry and these type of things. Of course, digitization can play a role there, but I'm wondering if we can talk about other things that are key drivers of innovation in these more traditional industrial incumbents. So to throw you one sort of difficult problem, the airline industry is suffering tremendously right now, right? And they've been tech forward for a long time. They have, cost management software, they have yield management software, and so forth. But what advice would you give the airlines coming out of this, to terms of doing something fundamentally different or new or different, innovating as you've called for? Those are two completely different questions, so I don't.
I actually like technology, but I also like deep tech, or like biotech and so forth. So I don't think digital is kind of a silver bullet for everything. So now let me go to the first question, which was around, AI was there, but the problem is on the human side and so forth. So I think first of all, I would say two things. So the technology problem, although like now every student that comes, I studied at ETH in Zurich here, every student that comes from ETH more or less knows how to train the algorithm. There are still problems a little bit with this technology, which is hindering adoption, like inherent biases and so forth. And also, how do you productionize AI to be like a software? It's not such an easy challenge. So not everything was resolved. There is some skepticism then on the receiver end because of that. And some companies who are kind of taking this seriously, they're also trying to create dashboards where the algorithms can explain why did they make certain predictions and so forth. But I do agree that that's actually like a minor problem. I think there are two problems with the adoption side. So first of all, if you kind of throw in a new fancy tool in a broken process or a very archaic process, I mean, you can just move this thing so much. So one thing that would actually dramatically facilitate adoption is really different ways of working, redesigning the processes, making companies be more agile, not to use the buzzword, but more flexible in their approaches, and integrating these tools in like everyday's workings. So what we typically do, we have actually user-centered designers when they're building these algorithms in order to understand how they can impact people's jobs, and how they can change their decisions based on this, so that the tools are kind of seamlessly integrated either in the existing processes or processes are redesigned. Then the second thing is actually there are two more problems with this. So the second is kind of the capabilities, the mindset, and the understanding. Both, not just having a group of data scientists in your organization that can build, but on the front end, having a management to understand where can analytics really add value, or any other technology, and how to really utilize it for the best of the business if we are talking kind of embedding it in the core. So having that kind of management and business capabilities, it's a quite an important thing. And the third one comes with really what is kind of, I call it, as Ivanka, I love these kind of tourist innovation versus strategic, is really, I mean, this became like a shiny object, having AI, and then everybody liked to have their own pet project. And what that led is to the disease I call pilotitis. We had a gazillion pilots that you just had some subscale attempts. And then, people were trying to extrapolate the value from the pilot, and it led nowhere. I think actually what worked much better is when there was a real kind of target. So I want to, make my sales force 30% more efficient using AI. or I want to increase revenue 10% through targeting where my segment is n equal 1, and I create a digital twin using AI, and I model, what will be my customer response to different strategies. And then actually going back from that kind of a high-level aspiration into what are the use cases that enables me to do that, and how my technology backbone needs to look like and be simplified in order to scale. That few companies did. I have a famous, I think it was JP Morgan, where the CEO said, I want to make us as a Google for finance. Although that sounds a little bit fluffy on a high end, it is very deep aspiration, because that means many things, and that was translated into many verticals. So what I'm trying to say with this is that people took this, in that way, strategically with the target, that led to much better results. So extrapolating business domain. And the final thing is, sometimes you need to bite the bullet. You cannot scale this through the core. So you will need to reinvent yourself through, business building of new ventures in a way. So that's the other way that some took it. But I just want to say some of the remedies, but the problems are, as I said, capabilities. It is, how do you approach it strategically? And I think there are some ways to solve it, but not many have been successful. So you're absolutely right. The problem was not on the technology side.
I would like actually to add to that. To the
I don't know
point.
if you want to comment, and then I will go back, because you asked about physical supply chain and so forth.
Sure. So I would actually like to just add to those two things that you mentioned, Ivan, the point around the capabilities and the strategy first as opposed to technology first.
And there was a third thing, is the ways of working. I'm sorry, I forgot. I said
and the ways of working. So on the first one, I think that one thing that we are fundamentally missing at the moment are the methodologies on how to translate complex social challenges and use technologies to solve complex social challenges. So far, the focus has been mainly on identifying very narrow customer needs and solving them using technologies. In the post-COVID-19 world, or next normal, the intention is to reimagine broader social challenges that would require then to very careful analysis of what actually is going to be the problem that's solved, that usually will involve more stakeholders than just one easy to identify customer. So I think that we need new methodologies for that, radical innovation methodologies. And the second thing is that it's unlikely for the complex social challenges to be solvable, or at least it's going to be harder to solve them with involvement of only one stakeholder. So what we are seeing now more and more are the rises of the ecosystems and the multiple players coming together and working together to resolve those challenges. So what comes to mind in energy, for example, are free electrons. On the micro level, I already mentioned the ecosystems that got formed to solve deficiency in terms of ventilators, but even perhaps you have some point regarding that as well.
Yeah, no, I think there are two things. So one is, I'm going now a lot of in organizational philosophy, but I think, this idea where the organization is structured almost like an army, with subordinate commands. I think now we are at the real kind of transition. People want a sense of purpose. They want more flexibility. We are seeing that all of these kind of attackers are managing to innovate much faster. So I think the organizations, in order to innovate, they need to become much more, let's say, fluid and mission driven around certain deliverables. And I think then cultivating that test and learn internally is quite important. And then the other thing comes, as you are absolutely right, is these ecosystems, because I think it's becoming more and more difficult now, to imagine that somebody will, even Google we mentioned as a great example of innovative company, and I love to talk to them, but I think they're also a very good M&A engine, just not to forget that. A lot of their innovation was actually acquired. Even Facebook, somebody mentioned, like they couldn't build Instagram internally, they bought it. So at some point of maturity of the company, you need to kind of innovate, through the ecosystem, or to some who keep the fresh thinking. And I think the other example, like in Europe, was around biofuels. the French consortium with Airbus, Air France, Suez, and Total that are trying to innovate. So I think there are many of these that are being formed, and I think we can go much stronger on this, where multiple companies are working to solve challenges, combining technology, physical kind of high investment technology, digital technologies, and access to customers and the knowledge with a clear vision and mission. And I think the other thing is what I think, Ivanka, in terms of methods, how we innovate. So one is this organizational aspect that I spoke about. But the other is really, we have this interesting game that we sometimes play with clients. We call it portfolio game, where you kind of have long-term payoffs and short-term payoffs, and you need to place your bets. And actually, I mean, innovation is pure portfolio game in a way. And you as a company or as an ecosystem, you need to kind of hedge your bets somehow. And I feel often when we go and do like a portfolio review of the innovation projects in the companies or even ecosystem, I mean, they're very focused on like very incremental innovation, and then they forget even kind of growth platforms, not to talk about moonshot thinking and the business model transformation. And I think you need to somehow balance that. And then once you decide where you want to play, you need to build the capabilities to deliver. So some of this innovation will be, delivered through incubator type or business building unit. Some will go through the core. I think people often forget that. So I think it's that kind of starting from top, building a portfolio, and then organizational capabilities and the ecosystems. I think that that actually would kind of really help in terms of the things. And then to your point, adopting proper methodology for each of these horizons. If you're thinking moonshot, it's quite different that if you're doing an incremental product development, but you should try to balance that portfolio.
Absolutely. I think portfolios are really key. You need to keep those incremental innovations and business models to be viable on the short term, but then you also need new methodologies that help you create those moonshots and potentially co-develop them with the ecosystem and make you prepared for the next normal. So
yeah, I think the problem is, because many people are good at building portfolio, but they're trying to put a business case. And in some of these, especially moonshot cases, the answer is binary. I mean, either you have a zero or it's going to be big. Whether, quantifying it doesn't really help. You just need to have a bet, right? Somewhere in your portfolio and have appropriate resources. Of course, nobody's saying now take a huge corporation and bet on a crazy bet. That would be hazard or gambling, but you need to have a balance and work with external. And I don't see enough of that. And I think that's one thing that will now need to change. And then you have an organization that can, organizational vehicles that can adopt these different types of innovation, because some innovation is perfectly fine to go through the slow core.
Sure.
Now I'm mindful we are not addressing a second Jonathan question about physical innovation and the opportunities, but maybe.
Well, let me just summarize a few. I mean, you both mentioned some really interesting things, and which is quite provocative. It's like you cannot scale some of this from the core. And then you talked about, the problem pilotitis, that is not having a real significant operational or strategic target, but you're just playing around with nice to have ideas. But at the same time, you talked about the need to have flexibility and diversity in your portfolio of innovation, right? And getting the balance between the things that can be addressed in the core and things that are what Ivanka talked, moonshots, far more, revolutionary or unorthodox thinking. And so if I were to bring this back to I don't want to call them boring industries, but more traditional industries where far more of what they do is manifested in the physical universe. So supply chain, logistics, airlines, heavy industry. What advice would you give them? And these are industries that have huge debt burdens, don't have the free cash flow that the FANGs do. So adopting a lot of these practices, it can be done, but they don't have the same luxuries that a lot of the Googles and Amazons of this world have, right?
Yes. Part of this, so I'm not objecting. Actually, I do a lot of work in this kind of more heavy technology driven industries. I think, first of all, everybody has to understand where is their industry on the kind of technology or market disruption curve. So for some, it's perfectly fine to be kind of incremental innovator and just make your product 10% better and get the new product line if they're not close to any disruption. And I think it's not just saying, oh, everybody now needs to go this way. I think the others actually that are closer, like energy with an energy transition and so forth, I think they need to find a way, and I know you're asking much more concrete. How do you go there? And I think that's why we were talking about either ecosystem, because one way of the ecosystem is to bring more value to your customers and surround him with offering or her without need to invest or invent everything yourself. So you are kind of a convener, you take a part of margin and you bring the services. But the other, actually, what we were talking is more co-development ecosystem, where you kind of multiple constituents that would profit from the value chain honestly share the risk as well of the development and share the burden. And I think that could be one way where you open yourself, because indeed you don't have in-house that capacity. And I can give you a few examples. I don't know if I can name them explicitly, where in energy, for example, companies have openly created new kind of disruptive venture, but then open for financing by others and so forth in order to hedge the risks and can do it. So there is a world where with the proper kind of mission and the thing, they can actually convene the community. And then I think the third thing is what you, Jonathan, are also in some areas facilitating is this private-public partnerships. Because some of these are very strategic, especially for Europe, like automotive. Take that as an example. With autonomous vehicles, with everything, you will need quite a lot of effort from multiple parties. And then, given that this is for the continent, is a strategic industry, I think some sort of private-public partnerships that span the continuum from kind of innovators down to the market would also be helpful in the area. So I think they really need to find a way to spread themselves smartly in a way, because I agree with you, they can't do everything internally. But I also think there is a lot of opportunity in materials, and then the opportunity that many of them are not tapping today is the business model innovation. I mean, you mentioned airlines. Yes, everybody's now going through the rainy days, but some of the, like, I don't want to name now that I don't offend anyone, but even if you look at American Airlines, some are much better positioned with their business model, where they have multiple revenue streams, also from credit cards, from etc., and then have a core model that's cheaper to profit at the back end of this crisis than the others. And that's also but that's also an innovation. It's just not in a core. It was in a product and a service, not in a technology. And I think that's also kind of a not bad example to take.
Excellent. So I just want to echo what you said about the ecosystem being an engine for risk co-risk taking, and also for capability building, because diversity is what these complex social challenges require often in terms of technology, not just one, but several technological spikes. So through ecosystem building, that becomes better and easier than for any company individually. And public systems are also now required to take on some of the risks that represent market failures, where the length of the project is not something that the companies can take on and do it themselves. So I think there is definitely responsibility for the regions as well. But I don't want to go too much into that. I'm conscious that we are getting to the point where we would probably want to close this and open for the questions.
Great. So I have not too many questions. So if you do have any thoughts or comments or questions or criticisms or suggestions, please feel free to send them through the chat, the public chat room. I do have a couple questions, but they're both related to ecosystems. And how do they function? How do they facilitate new types of organizations that maybe allow this sort of outside the core risk sharing, co-development, portfolio strategy? And then secondly, is it just a place to cherry pick for M&As, or are ecosystems place for hedging risk, or are they fundamentally for doing something else? Those are the two questions we have.
Ivan, do you want
thoughts?
to?
Yeah, so do you want to start or should I, Ivanka?
Go ahead, Ivan. You're our guest.
Okay, so I think there are a couple of questions there. So one is, I will start from the value. Actually, what we've seen in the ecosystem, there are two types of, we call it ecosystems. I mean, one type is more kind of that's focused on the customers. So take, let's say, a pharmacy chain that's now building an ecosystem, bringing digital health companies, pharma and so forth. I think the value is twofold. Typically in this ecosystem, one value is that it actually should, so this should be strategically thought through, they should boost your core business. So if I'm a pharmacy chain and I'm creating an ecosystem of healthcare players around me, essentially what's happening there is I'm attracting customers because they are getting one-stop shop, and I'm enabling others to do the business model. I will charge some revenue fee, from that model, but actually I will gain much more from on my core business. And I mean, not to go now in hypothetical ecosystems, you can also think of an Apple phone as an ecosystem. So they have an app store, and a lot of developers can put their apps. They will charge them some fee for the subscription, but the value that they get from the data and everything is much bigger, so it feeds into their core. So that's the one that is more to the customers, and I think that's the main value. It can be also source of M&A and place to bet, to place certain bets, because you can now, let's say if you have a platform like Apple with an ecosystem of a lot of providers, you can start launching different services like Apple Health Kit and test and learn. So that's a very good one. The other one is more kind of what we were talking in the technologies that are very complex, like let's say quantum computing and so forth. It's the way to accelerate the development. So if in that area there would be a horizontal, let's say, focused on climate, and mobilize a lot of players around that, where the fundamental technology would enable different way to find, let's say, carbon capture molecules. That would be actually facilitating or speeding way to market, but then also opportunity to come in closer alliances or even acquire some of these companies as you see what works and what doesn't work. So these are kind of on the value. I don't know, Ivanka, if you want to add something, we can then pick the second question, what kind of organization you need to have to facilitate that.
Yeah, so I would actually like to, go into the second question right away. I thought that you covered all the things that were really important for the first one. I think that when it comes to the type of the organizations, culture really becomes very important, right? And collaborative culture in particular. So what the question then becomes is how you do that, right? If you are a closed organization that's not necessarily used to innovating and innovating openly before the crisis, how do you do that? And so we have actually explored that with a couple of cases in the sports industry. And what we have learned is, in order to start to open up to the ecosystem, it's really important to have the top-down support. So it has to come together with the top management support. It has to be supported by a certain structure, an open innovation organization that can help orchestrate those collaborations between the ecosystem and your internal ecosystem of verticals and key decision makers inside of the organization. And then finally, it has to be incentivized. We have seen a lot of grassroots employee initiatives for innovation coming out of the COVID-19 crisis. People were motivated to help. It's important now to bring some structure in order to systematize that, I think.
Okay, excellent. Looking at the time, I think we have maybe a slot for one more question and then final comments. And out of the questions I see now, I'm going to choose the most difficult one. Okay?
Uh-oh.
And it goes, according to my understanding, many startups went bankrupt during the pandemic because of investors' pessimistic attitude towards economic growth and the shortages of necessary supplies. How do you think entrepreneurial bricolage or resource bricolage in an ecosystem will play in entrepreneurship and SMEs innovation in the near future? So maybe implicit in this is, that system didn't work initially, right? What can we learn from it, and how will this function in the future, hopefully more successfully.
All right, so Ivan, do you want to go ahead, or do you want me to?
Maybe you start, and I will build this time because I'm thinking.
Okay, sounds good. So so actually, I think that there's definitely has been some pessimism, at least from the data that I have about, and apparently in the 2000 and in April 2020, there were 75% of startups that were about to lose access to finance. So that was the latest data that I have seen. And at the same time, however, the National Venture Capital Association in the US reported about 120 billion available for investing. So what seems to be the case, that there has been, you know, a pause in terms of re-evaluating what will be important in the next normal. I think that this is a normal cycle to a certain extent, but it potentially also exposes the disadvantages of having one primary model of financing of innovation that we had, which is a VC innovation approach. It is really targeted towards a particular type of startups that can have highly scalable innovations to usually consumer-oriented problems. So I think, to sum up, one thing is a normal reevaluation of what will become important in the next normal. The second thing is a structure challenge of one type of financing model, at least in the US. In Europe, I think we have different problems actually, but I think even it would be better positioned to talk about that.
I'm actually a bit worrying that you know, this kind of situation will create like divide, even further global divide, because in Europe we already had problem with late stage capital for scale up of companies, according to an analysis, was much lower than in, let's say, China and US. And even if you think large part of that late stage scale up capital was coming actually from US and China into Europe. So I think at the moment now, even that capital becoming more pessimistic. To your point, it's leading to more debts of companies and technologies. However, depends if you see that as a threat or opportunity. If you're a corporate with a good cash position, it is also kind of your opportunity to handpick, you know, some of these best companies and allow them to survive in exchange for, you know, future partnership and profitabilities to accelerate. And I do see that also that trend is happening. I think how will that play out going forward? It really depends. We did this kind of very seminal paper around scenarios of the recovery from post-COVID. It'll really just depend on the shape of the curve of the recovery. I don't think on the long term this will disrupt, because I mean we really see massive surge of technologies coming our way, like there were in comments even mentioned 3D printing, but if you think of connectivity, if you think of quantum computing and so forth, I think that trend is kind of almost unstoppable. It's just there will be some sort of shape of the curve that will change, and I think people shouldn't get too scared in their core business to you know, defer the future completely. So the ones who have good cash position, to Ivanka's point, should actually handpick the winners here, because this is now also the opportunity for that.
So just to that, in the words of Craig Barrett, who was the CEO of Intel in 2009, you cannot save your way out of the crisis. You can only invest your way out of the crisis.
Okay, so we have approached 6 o'clock, and so this is scheduled to end at 6, and so I would just, you know, some closing comments very, very quickly from the two of you. We have talked about the importance of culture, you know, what's happening at the core of the company. We've talked about the importance of capacities and mindsets and practices of managing stakeholders and managing ecosystems, cultivating ecosystems and governing them and leveraging them. And finally, later on in this session, we talked about some of the structural changes that may come out of this crisis. You talked about some of the challenges within the venture capital community, sources of financing and resources for companies that are trying to innovate and do things fundamentally differently. That's a lot to talk about. Do you have any, so the title of this session is "What's the New Normal Coming Out of this Pandemic?" Any short statements of how you may embody what the new normal might be for managers and or even employees, for all of us coming out of this pandemic, and I certainly hope we do very quickly. What are we going to learn about doing business and business's role in society? Very short statement that summarizes everything. I know it's hard.
Portfolio approach, building business as usual while reimagining the next normal.
Okay.
Ivan?
I think for me, the innovation is the next wave to grow, or next path to growth. I think that's the
okay. All right.
Innovation and technology. That's
okay. Ivanka, any closing thoughts, comments you'd like to leave us with?
Just thank you. Thank you, everyone, for being with us and sharing your comments and questions.
Thank you. From my side, too, it was very, thanks for all the questions and comments.
Okay, excellent. Thanks both to Ivan and Ivanka for your contributions, your provocative contributions. You've given us all a lot to think about and to work with and to learn from. We look forward to the next webinar. Thank you all outside for joining us. Thanks for your comments and for listening. And we hope to see you again soon. Good night.
Thank you.